So you're looking for a simple trading strategy, and I'm going to explain a simple trading strategy to you today in detail. A strategy that I've actually used for 30 years, a strategy that actually works in the markets. You can use it for Forex, you can use it for futures, you can use it for commodities. You can use it for whatever trading system that you feel you would like to use. And really, it works, guys. It's something that you can actually do. So you've been trading in the market. You've been going to YouTube videos. You've been going and buying courses that have cost you thousands and thousands of dollars. Well, did they work? Did they do anything for you? Did they make any difference to your actual trading? Or are you still struggling to find your way in the markets? My stuff is all free. I'm not charging you a cent. And I'm just trying to explain to you that the market is a 50-50 game. Sometimes when you take a trade, you win. And sometimes when you take a trade, well, guess what? You lose. The market's a 50-50 game because the stock market, the Forex trading, the futures, the markets that are made up of buyers and they're made up of sellers. 50% of the time, you take a trade, you win. 50% of the time, you take a trade, you lose. And you're going to say to me, but how can that be? Because I've got a system that should give me an edge. And we're going to go to the charts any minute now. And I'm going to show you a system that will help you with that edge, that'll give you that strategy that you need in the market. But here's the thing, the big thing. And that is you have to understand that everybody's got a strategy. Every single trader in the market has got some kind of a strategy. And every single trader in the market, would you believe this? They actually all want to win. And they all believe that they're going to win. Every single one of them, including you. So now you're telling me that you're going to get into the market and you're going to have a 90% win rate because you're going to beat all those other traders. Really? Because you know what you're doing. They don't know what they're doing because you're so clever. No, it doesn't work like this, guys. How it works is you've got to put a business plan together that's going to make you profitable. And after we've been to the charts, I'm going to go through that business plan with you and I'm going to show you how you can become profitable by simply learning how to lose, by simply managing your risk, and by simply approaching the market the correct way. If you follow my system exactly, there's no guarantee you're going to win. If you follow Tom's system exactly, there's no guarantee that you're going to win. If you follow Peter's strategy exactly, there's no guarantee you're going to win because the market's 50-50. And the reason for that is you can follow a system to the T, but if you can't psychologically have a business plan that works around the stock market, works around the system, there's no way you can win. There's a funny thing. You go and pay for a course. You go and pay for a wonderful course to trade in the markets. And you come out of there with full marks and you think, wow, I really know what I'm doing. This is so easy. And then you put real money in the market and suddenly everything changes. And suddenly you're not profitable. Suddenly you're losing in the market. And you think, why is this happening? Well, it's pretty simple, really, guys. It's all to do with the psychology of trading. That's what we're going to get to after the charts, because that's what you need to learn to win in the markets and to get over the idea of a win rate is going to help you to win in the markets and not your psychology. A win rate is meaningless for those of you who know me. And by the way, for those of you who don't know me, I'm Rob. Hi. And for those of you who do know me, I'm Rob. Hi. But guys, here's the thing. Trading is risky. 80% of traders do lose money. And if you don't like risk and you don't like losing money, you probably shouldn't be trading. Perhaps you should be doing something different because trading is risky. In fact, they've proven that on the 5-minute charts, 99% of traders actually lose money. When I say 70 to 80% of traders are losing money, that's in position trading, that's in swing trading, that's on the 4-hour charts and the 1-hour charts or the day charts. These are traders that are trading like tortoises, trading slow, that are actually losing 70 to 80%. Or 70 to 80% of them are actually losing. So guys, it's not as simple as you think. Hey, if you don't have money to trade in the markets and you're looking to get into the markets, I have left a link to a funded trader account that actually works down in the description that will actually help you to get ahead in your life and to get ahead with trading. And while you're there, pick up your free Forex book as well. It's in the description. It's there for you. It's totally free. And if you want the trade of the day every single day and you want a little video about how the markets are going, you can join the members area and become a member of the channel and help support the channel so that we can improve the sound levels on this channel. So look at this giant microphone. Anyway, guys, let's go and have a look at the charts and let's go and see the system that you can use that will give you an edge in the market, that will help you to determine where you need to be so that you can psychologically approach your trading in a positive way and become a profitable trader rather than a losing trader at the end of the day. Let's go see it, guys. So what I'm going to show you now is the simple way that you can, or the system that you can use for the strategy, the simple trading strategy that's going to help you to become profitable in the market. Now, a win rate is achieved by knowing the system, but becoming profitable involves the actual strategy behind trading. And that is having your stop losses the same and having your take profit at least at 2 to 1, 1 to 0.5 to 1, 3 to 1. It doesn't matter if it's 1 to 1 as long as you can improve on the trade as you go. Now, I always say there are 3 ways that we trade. We trade with the trend. Trend is your friend. Trend, there's your trend. Or we trade in a range. There are ranges such as this. It's in a range. Or we counter trade against the trend when we see its broken structure. Now, if you want to go over that, go over my previous videos. They'll show you nicely how that works. But, well, you want to trade the trend in this particular case. And how do you do that? Well, you draw the trend support line in, you draw the trend resistance line in, and then you simply take the trades off these areas where it hits the support or where it hits the resistance. Hits resistance, you go short. Hits the support, you go long with a green candle out. Now, how do you draw these lines in? How do you get these lines? Where do we put these lines into a system so that we can determine where these levels are? Now, what we will normally do, I'm going to use the DAX as an example. We go to the day chart, and on the day chart you take it to a line chart, and then effectively what you do is you actually need 3 points, 3 closing prices. And the reason I use a day chart and a line chart, the day chart is a more reliable indicator as to where the market is, and the line chart gives me closing prices to work from. Now, with my experience, I don't need 3 points. I can actually see that this is a trend, and I can see that these points are close enough to give me that trend to the upside, and then I can draw a support level as it is at the moment along this area here. This was a resistance, it broke through the resistance, it's broken to the upside, and it's continuing on up. And then you just take it back to the candles. The reason we don't use the candles to draw the lines is because they're highs and lows of the day. They're not closing prices. So these little tails behind the candles, what they depict is the real human beings in the market, because there are real human beings in the market, not just squiggly lines. And you can determine that the buyers were getting back in, or the sellers were getting in, or that the market's turning, or there's a lot of volume pushing the market down. There's a lot of sellers, there's a lot of buyers, which is why I use the green and red candles. A lot of people change the colors to make their psychology feel better. I like to be able to spot when the market's going down or up at a glance, and that helps having the right candle color. Because if you take a trade out of where it's broken through a resistance like this, you would wait for it to retest, and you would wait for the green candle, and on the green candle you would take a long trade based on the fact that it's broken through. If it was the other way around, you would wait for the red candle to come out and you would take it short on the red candle. They don't always work, but sometimes they do. So for example, it's the area, red candle comes out, take the short trade, and off she goes. That's how you trade on these normal support and resistance levels. For example, if we go to the FTSE here and you have a look at this, every time the green candle comes out of there, you go long. Every time the red candle comes out of there, you go short, and so on, and so on, and so on. This is in a range. It keeps on trading in that same range. Look Gold, you've got it in structure. It's going up, coming down, going up, coming down, going up, coming down, going up. What I've done here, you look for an area where there's a supply of money, it bounces out of there and it carries on up. So what you really need to do is keep it simple and trade within the support and resistance. This is a strong support level on the Euro US dollar. When the price gets down into there, it comes down, hits it, comes out with a green candle, you can take a long trade. There's a trend support as well. Comes out of that, goes long, you can take a long trade. But this is a counter trend trade. Now on a counter trend trade, what you got to look for is that it breaks the trend. So it's got to break that little high over there. Let's take it back to the 4-hour chart. So that's what we trade on. And then you get a slightly bigger picture. You're looking for it to break above these levels so that you can confirm that it's a long trade. So if we go down and we look at the US dollar CAD, this has been going long. It's a lamp pole formation, goes all the way up, breaks through the resistance, comes back to retest, gives you a green bar. It's a long trade. Now it's instructive going bullish. Now here you've got what we call a demand of money. The money is lying. There's a whole bunch of orders lying in this area. Now how can we tell that? Simply because before this green candle, we've got a little red candle. See the little red candle in front of it? And then a strong green move up, another green move up, another green move up. So this isn't even a support level. This is a demand of money level. So there's a whole bunch of money lying in this area waiting to be taken. So when this price comes down into there, it's going to take that money and it's going to continue on long. So those are the type of trades that you're looking for. Let's have a look at the SA40. There's a nice support level here, comes into the support level, bounces out of the support level, nice green candle, closes, take the long trade, off she goes. That's what you're looking for. If it was on resistance and it hit here and it effectively broke back down with a red candle, you would have taken the short as it did over there. But it broke through, went long, gave you a green candle, that becomes a long trade. It did come back and retest, gave you another green candle. It's going long, it's going strong. And that's how you look at a system that'll give you some advantage in the market. You see here, this is the US dollar Japanese yen, a big support level on the daily, big resistance level on the daily. It breaks through the resistance level, comes back, retests it, gives you a green candle, off she goes long. This is a long trade. There will be another resistance at some time, but you have to work it out. The only way to work out a resistance on this particular trade would be to take a trend line and put it in. Now I say don't draw the trend lines on the candles, but I'm just doing this from my own experience. Now you can see the trend resistance. Now you've got a resistance level that you can work with, and you can say there's going to be some resistance there. Now how do I work out my stop loss on these trades? The way to work out your stop loss, or your invalidation as I call it, work out an area where you feel if the trade price gets there, this trade will not be valid. I will not be taking this trade at that point. And that would be, for example, if you take this trade long or if you take this trade short from that resistance level, you would put your stop loss just above there, above the trend resistance, out of the trend resistance. Because if you were to look at it, you would say, oh no, that's a long trade. I'm not going short there. Or vice versa, if it was on the other side and you were going long, and then you would put your stop loss below the level so that you know if it breaks that level, then you feel that that no longer applies and it's an invalid trade. So that's a good stop loss to take. And it'll also prevent you from moving your stop losses around. So for example, this trade here, what we've done, we've put our stop loss in at an invalidation area below this trend support. And not only that, we've put it below the last low. Okay. So it's clear far away. It's not going to come down here and look for that stop loss money and take it out. It's clear away from everything. And we are waiting for this to continue long. We will now soon move the stop loss up into a break-even scenario when this goes a little bit higher, because there's no point in keeping it down there. But then the trade's no longer invalid. If it does take it out, it's most likely just going to take it out and you've got a free trade. But while it's still in this position, you leave the stop loss in an invalidation area where you feel that if that price was to come down here, then it is no longer a long trade. It has become a short trade. You wouldn't take this trade if you walked up to it today. That means the trade's invalid. You take the loss and you walk out. So now that you've seen the charts, now that you know how to manage your risk, and now that you know the best way to manage your risk, now you have to understand that you could lose trades, that you will lose trades. You will lose many trades. In fact, you will lose half your trades. Can you believe it? Is it possible? I'm being told that I could win 90% of my trades. All I had to do was pay for this course and I would win 9 trades out of 10. Well, that is possible. for you to win 9 trades out of 10. But what you're going to do is you're going to win 9 trades and you're going to win $10 on each of those trades. And the 10th trade that you lose, you're going to lose $1,000, which would put you about $900 in loss. That's the problem, guys. A win rate is meaningless. Everyone who knows me knows I say this. Trading's 50-50 and a win rate is meaningless. The only thing that means anything to you and to me is how you can be profitable. Now, the best way to become profitable is to use this simple, easy business plan that you don't even have to write down. In fact, all you have to do is keep it in your head. And this is simple. Risk 1% on every single trade, 1% of your account. But keep your account at a standard level. If you start with a $100,000 account and it builds to $300,000, don't start risking more. Just take the $200,000, put it in a bank account and carry on trading with $100,000 until such time as you are comfortable and you can sleep at night when you're risking $2,000. Now you're risking $1,000 per trade. So even if you were to take 10 trades, you're only risking 10% of your entire account. You're not risking 50% of your entire account or more. Now, you've got a 1% risk on each and every trade. Keep that risk the same. Do not change that risk. And understand that when you've bought the trade, you've lost that $1,000. It's gone. Put it in your mind that you're not getting it back. You've paid for a trade, like you bought a goodie or a chair or a desk or whatever. Because if it's going against you and it's hurting you and you're feeling the pain, you're in too deep. You're trading too much. You've got too much money at risk. You need to be comfortable with that loss. You need to see $1,000 loss as, oh, well, it's not that big a deal. Okay, but you do need to keep the stop loss in place. Don't try and move it down. Don't try and hedge your bets. Don't try and double up on a loss, because there's no point in that. You want to be doubling up on your wins, not your losses. Now, when the trade goes into a profit, and this is part 2 of the business plan, you simply move your stop loss up to break even, and if possible, even into a profit, and then you start following your profit up with the stop loss. But keep it a fair distance behind. You know, give yourself that $500 gap until such time as it's reaching your initial target, which you thought, well, if it reached here, I would take the profit. Then move your stop loss up really close, because then you're going to get the profit if you get it, if it takes it out. Anyway, point is, you're not losing anything anymore. Now you're winning. Now you're in a winning trade. Even if it's at break even, you're in a winning trade, because now you're not losing the $1,000 anymore, and it's now profitable for you. Now you can actually make some money. Now you can actually follow it up and start making money. You know, one of the worst things you can do is when your trade has got a target of a $2,000 profit and it goes $300 into profit, you take the $300 profit and you run. Yeah, a profit's good. Any profit's good. Nah, not really, guys. Really, at the end of the day, think about this. You're going to take the $300 profit and it's going to carry on going all the way to your 2,000 target. That's actually going to make you feel worse than if you actually took a stop loss. So what you got to do when it's at $300 profit, if you're not comfortable with it there, then move your stop loss up to break even there and follow the trade up. When it goes to $1,000, move it up to 700 or 500 behind. But if you keep the stop loss too close, there's a very good chance that it will get taken out. There is a very good chance of that, because if the stop losses are too close, they do get taken out with the little spikes and what have you, the little pins that pinpricks that pins into a balloon and blows it up. So watch out for that. Don't get caught out by those either. But it's a simple trading strategy, guys. And it's just something that you've got to get your mind around to be successful in the markets. You know, the whole point of trading is to be profitable, not to have a win rate, not to show off with a win rate, not to tell everybody that you know how to trade. The idea is to make a profit. And the only way you can do that is if you use this business plan. If you change your stop loss every single time you trade, what's going to eventually happen is you're going to have a situation where you're going to have trades where you stop loss $200 and you're going to have trades where you stop loss $1,000. You know, the trades that are going to lose are going to be the ones that are $1,000, and the trades that are going to win are going to be the ones with $200. Now, here's the thing, guys. If I said to you, there's a horse race, your horse is 100 meters from the finishing line, and it's winning, would you like to double your bet? If you said no to me, I think you're crazy, but I think most of you would take that bet, because you're 100 meters from the finishing line and you're winning. And the bookie's saying to you, double the bet. I mean, of course you would. But let's say your horse is coming last or 5th or 6th, and the front horse is 100 meters from the finishing line, and I say to you, would you like to double your bet? Most certainly not. But would you believe that traders do that? When their trade's losing, they double their bet. When their trade's winning, they run in the other direction, or they get out. They actually leave the race. Yeah, you're doing it wrong. Do it right. It's all in the mind, guys. And you know, the most difficult thing about trading is getting your mind around it, getting the psychology around being able to trade profitably, being able to put money in and take those losses. Those are so difficult. Or even to, if you take the small win and watch it run on, it's so painful. It's a funny thing about our brains. The fear receptors, the adrenaline, the overreaction. There's just no way around it, and it can be pretty irritating. You've got to be able to get over that, and you've got to be able to switch that off to be successful. So even if you copy the best trader in the world, if you copy their system, you're not going to be that same trader, because you need to get the psychology around. If you could copy their psychology, then you could become the best trader in the world, because that's the only way that you're going to become the best trader in the world. And that is if you can copy their psychology down to a T. That you could put two traders in the same room with exactly the same system, and they'll achieve different results simply because of the psychology that goes into it, that goes around it, and pulls in behind it. Yeah, that's it. That's as simple as it gets. That's the trading system. Don't forget to come back and watch the weekend video, which will go over the last week's trades, and we'll go over next week's trades. We'll talk about go over the market and see what's best for next week. And then on Monday, another video comes out. And then on Tuesday, we've got the live show again. Don't forget to come to the live shows every Tuesday and every Thursday. Tuesday, we do the Euro Open. Thursday, we do the USA Open. Well, I hope that's okay for you. I hope you enjoy that. Guys, don't forget to subscribe. It helps the channel. Come back for more. Cheers, ciao, and bye.